We will go live tonight on a Friday evening. It's September 21st. I believe we're filming from Virginia, Virginia Beach, Virginia. It's really cool to have everybody in the group. It's cool to see that there's a lot of folks that are about as excited as me to actually talk about different stock ideas and what people are doing now in the stock market. No wrong or right answer right now in the stock market. However, this week has been quite historic. We passed over the 100 record closes since Trump has taken office. And again, I don't get into politics on the Independent Investor channel, but certainly something to look at, and is fair to acknowledge that if you've been invested at all in the stock market over the last couple of years, you probably don't have a lot of negative to say if you've, with all good faith, participated in the stock market in some form or fashion. I do want to get to one piece of business a little bit before we get started. There's been some folks that have hit me up asking about certain stock moves that I've had. And K97 is one of my real loyal subscribers, and I waited to reply to some of the comments over the channel so I could address some of those comments. Actually, they're really interesting, but I want you guys to kind of understand, I'm not doing the Independent Investor channel to just throw out information, okay? I'm very, very careful with separating what it is that I do, okay, and what it is that I recommend, because I really want to be careful with a lot of people who look to get involved in the stock market, and I don't want them to pick up on the number of different accounts that I have and the number of different rules that I have for each one of those different accounts, because I deploy each individual account in my portfolio differently, okay? I look at a different subset of rules that I deploy over each one of those accounts, okay? Conversely, if I'm recommending somebody to get into the stock market and start an entry position in, let's say, a passive vehicle, and you've got less than $10,000 in that account, my theme and my message has always come across the exact same. You only have to abide by one rule. That's it. So I've got some guys hitting me up like, hey, I own VTI or I own VOO. What do I do, Ryan? I'm sitting on some profits. Should I take some profit here? All right. When you start to do that, remember your first rule was to get invested in the stock market and stay invested in the stock market. When you start to deploy some principles of trying to time the market, you're going against the one rule that you set for yourself in that account. And that's really the one thing that I would wish for all people, is that you have to have a perspective in the stock market when you get started, okay? Now, I don't know if it's a fault of mine or if it's my seeking of transparency over the channel that I let you guys in on multiple portfolios that I have built up. I'll give you, a section over here with the M1. I'll give you a section with the Roth, the self-directed Roths. I've just here recently started the SEP IRA. I will start to be filtering YouTube earnings into the SEP IRA, as well as my brokerage account, as well as my TSP. So a lot of different avenues, okay? But you guys need to understand, I'm really not that open and forthcoming with my pension or my TSP, my thrift savings plan. And the way I deploy that strategy is along the lines of what I recommend for you guys a lot of the time. I take a passive approach in my TSP. I have a 70-20-10 breakdown. 70% is in the S&P 500, 20% is in small caps, and 10% is in an international fund, and I never look at it, okay? Now, how can I deploy a strategy over here of a completely 100% portfolio passive and then let you guys in on some of the stock trades that I have? For example, Praxair and Booking.com. I got lucky in both of them. They ran up quite nicely, and I went ahead and took the position off the table. If you look at that type of strategic trading, that has nothing to do with my approach on the investing side of the house, all right? But when you start to chalk up a lot of those different wins over time, year over year, the performance really starts to accelerate. And I just wanted to kind of throw that out there to you guys, because I've had a few of you guys who are real loyal to the channel, and I love every one of you guys. I really do. I don't want to push information out there that gets misconstrued to say, goodness gracious, Ryan bought, 10 shares of Booking, or 5 shares of Booking with $10,000. That's something that I should do as well. What I'm trying to do is offer information to where if I was sitting in a position of a new investor, what is it that I need to hear? Okay. And that might seem a little bit condescending. It's fine, because I honestly put myself in a position to where I didn't have this information when I started investing. I've made a lot of mistakes, and it's been with the brokers that I've chosen. It's been with the mutual funds that I've went with. It's been with the nature of account that I've started with, going with a managed Roth IRA instead of the self-directed Roth IRA. And you guys don't underestimate the power of the information that I've already streamlined for you guys. All right. It sometimes gets missed in translation when it's like, okay, Ryan, I've started my self-directed Roth IRA. What do I do now? You guys really need to understand the power of that information and know that it's evolved over time for me to just push that out there for you guys. And in a matter of days, you guys can streamline what it took me years to realize. And that is to get you that starting place as quickly as we can. We want you to understand that starting with the right account and starting on a passive path up to your first 10, maybe even $50,000, guys. If you're of a risk tolerance of a 3 to 5, there's nothing wrong with taking your money and investing it into the total market index that I recommend all the time. It has every one of the indexes combined into one umbrella stock that since 2004 has turned back a nice 7.5% return. All right. I want to throw some statistics at you guys as well, because I actually looked at the PIP, which for a lot of you guys who are in the TSP will understand that's the personal performance quotient, basically. All right. It's the personal investment performance percentage inside your TSP. And I was curious to see how my passive approach in my TSP was in comparison to the self-directed accounts, okay? You guys have to understand, I'm in my self-directed accounts every single day. I monitor it just because I enjoy it. It's a hobby of mine. I really like to be hands-on with those accounts as opposed to the passive approach. And I'm sitting on just over 18% year over year this year in the passive approach. So that just goes to demonstrate for you guys that I'm not recommending putting you on a path that's going to be boring, okay? I'm not putting you on a path that's going to not accelerate the market, okay? None of that stuff matters. That's a different set of rules that you're looking to abide by a little bit later on down the line. Another thing that you guys have to remember is that I can enter into and sell stock free of charge in my brokerage account. All right. Now, for a lot of you guys, I know I had pushed out the M1 finance option to you guys. And you guys, I really want this to be an open, transparent platform. And I know a lot of you guys, I see a lot of guys in here and gals that are familiar to the channel, but I'm going to tell you right now, I'm in the process of liquidating my M1 finance account. Okay. I'm not happy with the platform. I kind of put this out there a little bit before, as to what I was thinking. And I can tell you from a perspective of a user of the Merrill Edge platform, I can see the sheer differences. I really can. Now, for somebody who has that one beginning account, that one self-directed account, M1 can still work for you, all right? But I'm trying to provide transparency in that I put out an M1 video talking about the benefits of it and talked about the portfolio. And using the platform over the last month, I've been really disappointed in when I want to liquidate. I'm so used to being able to liquidate a position in a matter of seconds and take profit when I want to take profit, and I can do so free of charge. So just to let you guys know, I'm going to be transitioning that portfolio back to a SEP IRA with Merrill Edge. And that kind of brings me to what I want to talk about now with you guys. And then I'm going to get to some questions, but I have an extremely long agenda this evening. I want to thank everybody who's come into the group, but I get hit with this question all the time. And I had a comment come through the group, actually. Somebody sent me an email, I think, and they were really just distraught about looking at reviews online about the big brokerages, TD Ameritrade, Fidelity, Merrill Edge, Charles Schwab. And if they're in the group, certainly, I thank you for reaching out to me, but it was actually the only comment that I've ever had on the major brokerage houses of a negative connotation. They were talking about a lot of negative reviews online, and I certainly don't want to recommend a product that isn't going to suit somebody's needs. But I can tell you firsthand that is not the experience that I have had with Merrill Edge. They are quite good, and I do gather a lot of information from the community, and Fidelity really comes to the top a lot of the time, and TD Ameritrade. And then you guys know I've been with Merrill Edge now for years, and I'm ecstatic with their product. I use their platform and analytics and data free of charge. I mean, I'm not sure if it's unfair expectations, but very, very few things in life can you actually get so many free products from, and get so much education and benefit out of it. All right. So many people out there are so happy with going and just justifying every sunken cost out there and not realizing the power of the information that can be provided through your primary brokerage house. So I just wanted to push that out there, guys, and just add with this. If you guys are still undecided in the brokerage account that you go with, and you end up deciding on one brokerage over here and you don't like it, shut it off. All right. Shut it off and switch. All right. Don't second guess yourself. It is business. All right. It's business. It's not emotional. And for you guys that have been with, let's say, a financial planner for years as well, do not hesitate. If you guys are unhappy with the level of service that you guys are getting, do not hesitate to say thank you, but no thank you. At the end of the day, it is your money. All right. And one of the key themes of the Independent Investor channel is to teach people to take charge of their own money. All right. It is yours. Nobody is going to have a vested interest in the well-being of your financial health and well-being more than you. Nobody. All right. And the quicker you realize that, the quicker you can understand and separate the business aspect from your emotional stuff, which should be over here. All right. There should be no emotional content whatsoever when you're talking about your finances. If you're unhappy with your broker or platform, shut it down and try again. It will cost you nothing. It costs you no money to do that. All right. I'm going to go ahead and scroll up here and try to get to some of these comments. I do have an agenda for you guys tonight. I'm going to let you guys know I've deployed again another defensive strategy. So I have pared back on some of the holdings that I declared through my portfolio review that I released this week for you guys. I am back to a 60-30-10 split. So 60% equities, 30% cash, and 10% fixed equities right now currently in my portfolio. If you don't come into the live feed every single week, you're going to miss out on these types of updates for you guys. I provide that as transparency because what was good for me this week is not the same as what I'm declaring to you now live stream sitting at my kitchen table. All right, so 60-30-10, that's where we are right now. Deploying a little bit of defensive strategy for next week with the Fed back in play, looking to raise interest rates next week. So enjoy this week. All right. Don't get overzealous because next week it could be a completely different story as we enter into early next week. All right. I just wanted to be clear about that. So I had Obstinate One actually offer a stock trade that they took some profit in AbbVie. I think that was a good move. I basically responded and said, you're selling out of kind of a red hot sector right now. So just be kind of careful with that. I've owned J&J now for years. If you guys know, and have watched in my catalog. I put out a video and it's still relevant and it will continue to be relevant. The top stocks that you could own forever, and Johnson & Johnson has made that list, and it's one of those that I don't trade. I don't move out of positions like that. So you guys can kind of get a sense at how I deploy different rules for different types of stocks. Another stock that is worth mentioning this evening is JP Morgan Chase, and that was another one that I offered some time ago during the stocks that you can own forever. Financials are back in play again, and I'm going to kind of offer to you guys what I feel are some of the rotated winners, where some of the growth money is coming off the top and they are rotating back into value. So I'm going to kind of offer where I think some of that money is going, and how you guys can look to maybe profit if you are in a point in your portfolio building where you're looking to add some single stock exposure as well. All right. So good move. What happened was they added more J&J to the position there. I think that was good. I'm making a killing with Pfizer, Merck, and Johnson & Johnson. So hopefully you guys, I've recommended those stocks many, many times. I didn't have to look at fundamental or statistical analysis to justify buying those fine stocks. I typically do quite well in the stock market by just investing like an average Joe. So I'm going to borrow Dave's slogan there for a while, but we tend to like to relate with each other because this is investing for the common person. Honestly, you guys all have different endeavors in your life. A lot of you guys are tuning in to the channel from a lot of different countries, and I also want to offer this: if you're tuning in from Israel, for example, or you're tuning in from Ireland or Eastern Europe, for example, I want you guys to understand that I represent the Independent Investor channel. It just so happens to be that I am domiciled in the US. I don't speak about the investments as if they're the best or the worst. I just offer them as what is available in the United States. And I would deploy you guys to really understand some of the fundamental lessons that I put across on the channel and look to deploy some of those strategies. I give very, very good strategies on budget, savings, what it is that you have in your individual countries that can allow for some of these avenues to take place. I know a lot of countries don't even have a Roth IRA, let alone a self-directed IRA. So, absolutely. I just want to give kind of a shout out. Some of the folks tune into the live feed with a significant time difference. And I want to kind of welcome a lot of you guys as well, because I know a lot of you guys are really devout as well. So welcome to you guys. I want to scroll through and get to some of these questions. Great week, took profit in F-Tech Fidelity. It's a tech ETF. So I've got Avi A who's offering, if you guys don't understand that tech ETF is kind of like a spider ETF, it's going to pick up a specific area of the stock market, which is technology stocks. All right. I think that was a wonderful move because I think technology is going to be the subject of a sector that is being rotated out of, not rotated in. Now, I will premise this: Google and Facebook and Amazon and some of these high growth names that have been really, really growing well, I will throw NVIDIA in there as well. They are going to always be a good stock to buy, all right? But if they take a little bit of rotation here, I think a lot of the hedge funds are rotating out of some of these higher growth names and they're rotating into some of the value. So I think that was a pretty good move right now. And I would just caution you guys, outside of Facebook, which I think is probably done going down, it's built the base at 160. It jumped up 165. If you picked up Facebook this week, I give you some credit. It took some courage to do that. I've just held the 30 shares on the way down, and I really didn't care where it went. I wasn't going to sell the shares anyway, so I did not buy more. I just exercised my right to hold the position. But for you guys that took advantage of this dip, probably a good buying opportunity in Facebook. But I would encourage you guys to be careful with high growth tech right now. All right, so that was a pretty good move. So Ryan, what do you think about NIO? I heard it's a risky stock. You know, bought 300 shares, cost me 2,600, made myself 350, got out quickly yesterday and took my profits. Doug Whitaker, man, that's really cool. It's really enjoyable to me to hear about you guys taking and having the courage to deploy those trading techniques. And I don't expect you guys to look at a post like Doug's and say, hey, I can do that. But why not? I think Doug comes on here and has come on here really historically and offered some of these trades. And it's a lot of what I do. All right. If I have the opportunity to take advantage of a stock in the stock market, now it doesn't work out all the time, but it works out a majority of the time. All right. And it just kind of turns you guys on to some of the prospects of what is possible in the stock market. All right. And it kind of defines a range of where you could be. And if you're a new stock market investor and you're just tuning into the channel, maybe this is your first couple times visiting the channel, maybe you do give yourself a chance to start passively in the stock market. But I like to hear stuff like that because it defines a range, right? When I offer, hey, I had booking holdings this week, but it ran up 3.5%, and I went ahead and took the profit. I took a $300 profit in 2 days, and that's just what I did. Right, wrong, or indifferent. Booking.com went up again a little bit today, not too much. So I left a little bit on the table, but you have to make strong moves in the stock market, all right? And if that strong move is getting a passive position built up in that, and you're going to invest passively, dollar cost average and dividend reinvest those investments over time, then stick to that plan. Don't waver in your plan. Be strong, be steadfast in your plan until the time when you feel like you want to add more rules to your portfolio, all right? And that's when you start to blossom out and put some of those cornerstones into the portfolio after you've built a big baseline in the indexes. Now, your rules for those passive investments shouldn't change at all. Okay, it's just that you're adding more rules to the portfolio as it starts to get bigger. And as it gets bigger, you guys need to understand it becomes a lot more interesting. I know a lot of you guys are like, wow, you know, I'd love to have a portfolio like yours. Well, I had to go through the trenches to build a portfolio like mine. And I would wish that upon you guys as well. Okay, I want you to have lived through some downturn. I want you to know what it feels like to take an ETF into the red, okay, and invest more. All right, those are lessons they're priceless. They really are, okay? It's not always going to be about roses in the stock market, okay? Now, for you guys that have taken my advice over the life of the channel's been on for around 2 years now. And for you guys that have watched the Independent Investor channel and what I've said has made sense, and you've deployed some passive strategies within a self-directed account, and here you are 2 years later or 1 year later or 6 months later, all right, in each of those conditions, you should be sitting on some profit, okay? Unless you're investing in a different stock market that I'm investing in, you would have tripped and fell and made some money. If nothing else, you've learned some inherent lessons on what it feels like to take some appreciation in the stock market. Don't apologize for that, all right? Don't. I want you to reflect over that time that you've been an investor for 6 months, 1 year, 2 years, and I want you to truly acknowledge that you did it. You made the decision to enter into the stock market. It's appreciated up a little bit. But now's not the time to start changing rules on yourself, okay? Now is not the time to start second-guessing your program, all right? If you started with 5,500 and you're now sitting on 7,000, all right? Stay the course, all right? If you want to make a change in your investment health, stay the course with your portfolio, but start adding some cash to the side right here. So this will continue to build and appreciate and take advantage of everything the stock market has to throw at it, while you're building cash over here, all right? Very, very important. A lot of investing is psychological, man. It's not physical, all right? I say all the time the physical part of it is easy and fun, all right? The psychological part of it, That's the crazy part. That's the part that you really need to get mentally tough on. It really is. All right. Hey, I'm new. A friend recommended me to you. I've got Captain Dunzo. Listen, if there's anything, this is more of a two-way street on this live feed. I open this up for the devote folks in the subscriber base. It is open to anybody, certainly. But I kind of have the same folks come in here every week, and I really like it. And I'm not going to apologize either, because those folks will probably benefit tenfold from being part of this community. Thank your friend for recommending me, or recommending you to the channel. I will summarize, and this will probably be beneficial for you, for me to kind of summarize a little bit of the niche on the independent investor channel. If you're somebody new and you're looking at, is this just another investment channel? I will contend that it is not. Okay. I just got called again by Merrill Edge today. They call me all the time. They're trying to get me to go with their managed investment program. All right. Yes. Well, let me explain our managed investment program. Let me read the disclosure to you and let you know that you can lose capital and this and that, and trying to scare people like usual. But I will tell you this. 7 years ago, I started self-direct investing. Okay. It was a change from what I had been used to. I've been investing for 25 years. But when I switched over and took hold of my accounts through self-directed investing, basically what that meant is I took my managed Roth IRA accounts and basically reclassified them. Okay. So basically I pulled back on all the fee structure that I had opted into with a managed account, and pulled back on that and took charge of it. Okay. Now keep in mind, this concept is scary for a lot of new people. They may not understand that it even exists. And just the name alone thinks, oh my goodness, I have to sit and look at stock charts all the time and make decisions about my finances. And that's just so far from the truth. All right. The truth is the products that are out right now will give you just as good or even better exposure than a lot of the mutual funds did when I started investing 20 years ago. You can get involved in some of these total stock market ETFs. I do recommend, of course, the S&P 500 all the time. You can get involved with some of these passive vehicles, put them in a self-directed account, all right? And you're not only going to maximize your profits in those low-cost investment products, but you're also going to tax protect yourself, all right? So if you have any questions directly and you're wondering about the message or the niche on the channel, this niche burns me up inside. This is really what motivates me to come on and do this every Friday. It motivates me to put out fairly consistent content. I wish I had time to do daily uploads. I really do. But when I have more time later on in life, I will be doing this channel indefinitely. Okay. The Independent Investor channel is not going anywhere. It is solidified in my life, and it is not going anywhere on YouTube. Why is that? It's because the information that we're putting out there, number one, is stuff that I do. Okay. So this is a personal testimonial with regard to how you can deploy some of the self-directed strategies that I do in my personal life. For anybody out there, the kicker is you don't need any experience whatsoever, right? Remember how I talked about a lot of people out there have a Roth IRA. They just don't understand that they can reclassify that Roth IRA and redesignate that account as a self-directed account. A lot of people don't even understand that that option exists, and there's a reason for that, all right? The financial institutions that offer these accounts do so as a service and a service alone. They do not do it as a moneymaker, all right? Make no mistake, these folks do not openly advertise and put commercials on TV saying, yeah, come to my brokerage house. I'm going to give you all the benefits of the platform. The platform is going to be exactly the same as it is for my managed customers, but we're going to designate you a self-directed account and allow your accounts to grow differently than these folks over here. Your money over here is going to be liberated, and we're not going to take any fees out of it. Same investments, all right? This account holds the same ETF as this, for example, This account is going to outpace this account every single day mathematically. All right. This account is going to outpace this account. And a lot of people have no idea that this account even exists over here. All right. So welcome to the channel. Welcome to the community. I like to think that a lot of the success on the channel is really built with the success of each and every member that tunes into the message and extracts little tidbits from me, because I've got a ton. It's my favorite topic. And I throw those tidbits out there for you guys to enrich your own lives. It's that simple. Okay. The success on the Independent Investor channel has nothing to do with the subscriber number that I have in the bottom corner. It has nothing to do with my financial success on the Independent Investor channel. I do not charge for any of my information. I just saw that somebody threw a $15 tip in there. Guys, thank you so much. I really appreciate that. That just goes to help and support the channel. I have not realized one single dime of payment on the Independent Investor channel as of yet. I've owned the channel for 2 years. I've come up with all of the LLC and incorporation stuff out of pocket. And I've done that because I believe in the message. I believe that there has to be someone like myself that is providing this testimonial to you guys. And I rely heavily on the folks that hear my message, believe in it, internalize it, put it to good use, and then feel so obliged to go and recommend it to their family and friends. Because make no mistake, all my family and friends know about it as well. And that's exactly what I'm looking to do, is just share the message out there, because more people need to get a hold of this information. All right. And I just happen to be one of those folks that have deployed it for a long time. And I would encourage you guys to try to find somebody out there that's been doing self-directed investing as long as me and actually succeeded at it. Okay. Because the majors have a lot of statistics that show that a lot of people who get involved with self-directed investing, they fail. Okay. And there's a reason for that. They fail because they don't have the proper validation to know what they're doing is correct. They think what they're doing is correct. Okay. And there's a big difference between thinking that you are doing the right thing and knowing mathematically and factually that you're doing the right thing. There's no comparison between the two programs. And that's a lot of the theme of what I talk about throughout the course of the channel. So welcome. I wanted to take a moment and acknowledge that your friend referring you is actually where I put a lot of the value on this channel. Make no mistake, I'm very serious about that. So welcome. Thank you. Can't wait for the good information tonight. Yeah, you know, it's amazing how we can do this every Friday. And you guys know that I don't stop until I hit end stream, okay? I throw this stuff rapid fire at you, and I don't finish a live feed without, I don't ever get through all the information that I have to offer to you guys, okay? But I do try to be as engaging as I can. I'm very aggressive with making sure that the questions in the group get addressed, all right? So very cool. So again, I've got Avi A talking about Aurora. It was fun to watch Tilray this week. It really was. If anybody actually invested in that stock, I hate to use the word invested. I would offer the word gamble. If anybody actually put money on Tilray and made some money this week, that's just another example of an infinite amount of ways that you can make money in the stock market. And I do applaud you. I think they halted the trading on the stock at least 3 times. I believe it was Wednesday when Tilray spiked all the way up to $300 a share. Unbelievable, unbelievable run. I've seen stocks do that before in my history. I don't touch them. I don't advocate for any of my members to touch them. At the end of the day, I'm not your father. Okay, I'm just a community member offering some stock or generating some stock discussion. And if you guys actually got involved in Tilray this week and made a few bucks, I applaud you. Okay. I say all the time at the end of the day, the stock market game is one of those that you have to approach like it's a war. Okay. And at the end of the day, it's all about making money. All right. It's just everybody deploys a little bit different strategy to realize their profits. And there is an infinite number of ways to make money in the stock market. And we look to exploit every single one of those ways on the Independent Investor channel. All right. I've got Daryl Rika on the line. who says, hello, glad to see the live feed tonight. Yeah, we're going to make a consistent go at this. I did a couple months ago take a little bit of leave from the channel. That was much needed. I took a relocation, but we are back. And at the very least, this is kind of what's keeping the channel going for me, is that I'm actually having a little bit of difficulty right now finding the time to do some of the more strategic video uploads that I was doing in New York City. But to be quite honest with you, I enjoy this more because it seems like most everybody that comes into this particular group wants to be here. And that means a lot to me. So I'm very aggressive at trying to address your concerns if you have any, or if we can just strike up a conversation about stocks, we'll do that too. Baby Cake says this week is all green. It was a hell of a run. Yeah, it really was. And again, I try to throw those tidbits out there to help you guys. So while everybody else was enjoying the stock market, little old Ryan was on the side hitting the sell button. Okay, more often than not, I took some of my trading positions, moved them into cash. I was close to 98% invested at the start of the week, and I've moved my cash back to 60%. That's just where I am right now, okay? And that's not counting the cash that I have on the sideline in a savings account, all right? It brings me to another point that I want to offer, and I do, as these tidbits come to me, I just throw them out there for you guys. And if you're listening and paying good attention, this really, really should resonate with you guys. And this is something, again, and I don't mean to bag on other YouTube channels. I do kind of, because it's as if they don't have quite the experience to talk about some of the themes that I talk about. Something so simple as to why I would look to liquidate an M1 finance account that's perfectly fine. For the one benefit that I was missing is having all of my investments on the same screen, okay? And it brings me to my question, how many accounts should you own? Should you own a checking account? Should you own a savings account? Should you own a brokerage account? Should you own an individual retirement account? All right. And the answer is yes to all of them. All right. Now, you don't have to have them all at the same time. All right. The first two that you open is going to be the savings and the checking account. Why? It's because those two strategic accounts are going to help foster your budget. All right. They're going to help you build up a savings account and prove to yourself that you can save and pay yourself. All right. And then the checking account is what's going to be used as the inflow and outflow account. And I do videos on all this stuff. All right. But those are your two preliminary accounts. And if you didn't open an investment account for years after that, those two accounts could really help you build a nice base of cash and budgeting skills. All right. Those two accounts. But when you're choosing your brokerage account, I want to throw this little tidbit out there for you. I cannot tell you how much of a benefit it is for me to have all, now I've got 7 accounts and I have them all on the same screen, okay? Even Merrill Edge allows me to take my TSP and allow me visibility on my Merrill Edge platform because I link them all together. And I can't tell you how big of a benefit that is just for visibility, all right? Do I log into my TSP account every day? No, I don't. It's my passive account. I could care less. But it is nice from a vantage point to have that available to me when I look down there and I can kind of see how that account is growing and I've got visibility on it, all right? I have my kids' 529 plans all on the same screen. Merrill Edge allows you to do that. And I want you guys to think about that. When you're starting at choosing your financial institution, I really want you to consider having all of your eggs in the same basket, okay? Don't be spread out all the way over here and have a few accounts over here and a few accounts over here and a few accounts over here. It's going to make things so much more difficult. In this aspect, consolidation is the difference, and the strategic introduction of those accounts one at a time, okay? Checking, savings, then retirement account. That's the third account that you offer. If you're married, all right, you open another retirement account. So that's 4 accounts that you've got. Once you're able to save money, get a good budget, checking and savings, then you've got the retirement accounts here, all right? Once you're able to maximum fund those All right. Then you can move to a brokerage account. All right. Now, that is only if you do not have an employee sponsored 401k plan. If you have the 401k plan, you need to make sure and contribute to the 401k before you justify opening up a brokerage account. All right. There's no reason to go with a brokerage account if you have a nice 401k account, especially if they look to match you funds. All right. So the theme of this particular message is do not underestimate the power of having the visibility of your accounts all on the same screen. It's going to make it so much easier for you guys when you're adding and populating your brokerage account, okay? It has to be something that you want to get into and populate. You have to want to build your watch lists. You have to want to get in there and populate those budget tools that they have on there. All that stuff is just killer. It's just awesome. And I encourage you guys to take advantage of that. And that advice that I give you, again, if you're just willing to do it, it costs you nothing. All right. It costs you nothing except for the time that you'll spend and investing in yourself to get familiar with your platform. It's going to make you powerful. It's going to really make you that much more aware of the functions and the tools that are available. If you want to go in there and do an analytics on a particular stock, you can do that. If you want to break up your watch list into sector allocation, you can do that. All right. And all those tools are going to help fine tune your financial health going forward. All right. I highly encourage you guys to look at those prospects. You can never beat the market, but only flow with it. Yeah, I agree. And this is such an important statement. I could honestly talk all night. You guys and I can talk all night, but I'm just going to talk until I lose my voice tonight. But you can never beat the market, but only flow with it. And I'm going to admit something to you guys. I'm actually a little bit envious for the folks that I'm recommending this information to, because I wish that I had this information 20 years ago. All right. I would be powerful right now. Okay. Instead of working with the portfolio that I have now, which is respectable. All right. If I had this money and I could have started when I was 18, early 20s, getting into passive ETF investing, I would have bought the VTI or the S&P 500, and I would have just held it indefinitely. I would be sitting on a mountain of cash right now. It would not even make any sense whatsoever to look at a plan that I had for 25 years where I've built this mountain of cash and look at selling it right now. All right. And that's kind of what I want for you guys. I want you to really understand and look at the example that I had there for my passive portfolio. Now, I did offer some numbers in my self-directed account. I've got year-over-year performance in my particular account, 28.22%. I've got year to date in her portfolio at 36.37%. These are real numbers. These are right out of my portfolio, guys. And I don't mean to offer these to brag. But listen, I spend a lot of time looking at the stock market, and I don't want you to say, okay, Ryan's making killer money outpacing the market, which I am, but it's just a demonstration of what is possible. I do not do fundamental analysis, and I don't do technical analysis, all right? I buy good quality blue chip companies inside my Roth. I am a very disciplined investor in that I have no problem taking a good blue chip into a downturn, all right? I have no problem picking up a good blue chip on the low and picking up it at a good entry point and allowing to take some quick profit going forward. That's just some of the strategic trading that I do. I also do passive investing. All right. So I deploy a lot of different strategies to get these rates of return. Okay. So I've got year to date in mine. That's from January to September right now is at 14.13%. All right. So the year over year performance goes all the way back to September of 2017. Okay. That's the 28.22%. And the year to date thus far in my account is 14.13. Not bad, right? But remember what I said about the TSP working at an 18% clip? I do nothing, zero. Anybody could get that type of year over year. I think there was a year over year declared here in the community of another TSP owner that was just about the same as mine, 17.3%, something like that. That's killer returns for doing absolutely nothing, for taking your investment and putting it on autopilot and doing nothing. other than just fund it. That's it. That's the only thing you do. Add money, add money. And I contend that you could be anybody, and resonate with a passive program and say, you know what, I don't know squat about the stock market, except for I understand how important it is to invest, and I'm just going to buy into this, okay? And I'm going to validate it over time for myself, and you will. You really will. And that's a key takeaway, all right? So I've made some really good returns in my self-directed account, but the reason I say I'm kind of envious and I'm freeing up some cash is I actually feel that devoting a large sum of money to this particular stock market is asinine. It's not something that I will do, okay? I work very, very hard for my money, and I just feel like right now for me, the strategic advantage for me to enter into stock and keep my positions careful, okay, and not over devote to the stock market is the most prudent move that I could make. Now, with that said, I could be completely wrong, and this market could continue up for the next 5 years, and I would miss out on that particular passive piece on the larger, all right? But remember this passive piece over here that I will enjoy if the market does continue to go up. Remember the win-win situation that I talk about all the time? Always set yourself up to win if the stock market continues to go up over here, and it will benefit if it does go down, which I've got cash on the side over here, and I can take advantage of that buying opportunity when and if it occurs, all right? We do not know what's gonna happen in the stock market. The idea and the philosophy is to prepare to deal with anything that the stock market is gonna throw at us, and I will give you a guarantee, all right? And here's my guarantee. It's either gonna go up or it's gonna go down, all right? All right, so let's see. Glad to see the live. Fidelity keeps trying to get me to sell some of my stock off because they say I'm overexposed. I just want to know, what is their agenda? Wow, that's a really good question. I've got Mystery Queen 86. That's a really good question because in my experience, when I've had 4 financial planners in my career. They didn't want to deal with single stock at all. It doesn't benefit them at all. It's a pain it's a pain, okay? They've always got you calling. I'm really surprised that they're calling you wanting to liquidate their account. I actually think that's fairly prudent advice. I do. I'd like to understand a little bit more about how much money you actually have exposed to the stock market. I mean, I just told you I'm 60-30-10 right now in my larger holdings. Again, with a sizable amount of cash. I've got 100 grand just sitting on the sideline. That's not even the cash I'm talking about in the invested capital. So I'm sitting on a lot of cash right now, and I sleep well at night, okay? I don't look at the stock market as something that's going to be the end-all, be-all. I'm looking to use and abuse the stock market for my own personal greed and benefit, all right? Now, I want you to hear what I just said. I'm looking to use the stock market for my own personal greed and personal health and personal and financial well-being. That's it. All right. I don't have any emotional tie to the stock market. I'm not married to the stock market. All right. I have no emotional tie whatsoever. It's all business. All right. Now, if by nature of my business with the stock market, it actually punishes me because I'm exposed to the stock market, so be it. I accept that level of risk. But I'll be dang if I'm going to enjoy being involved in the stock market 100% exposed to the stock market. No way. I've been through this before, guys, and the stock market doesn't go up forever. All right. It does not. All right. And if you're hearing me out, I'm not trying to scare you. What I'm trying to do is the time that when the stock market is making its 100th, all-time high, that is the time when you want to start to looking at it. And me, I was licking my chops this week when I was given this opportunity to again, liquidate some more cash for some profit. All right. I was very, very happy to do so because this is not the time in the stock market that me personally want to be 100% invested. It's just not. It's not one of those positions I want to be in. And that's just me personally. All right. So I don't know exactly what their agenda is with regard to you selling the stock, because taking some position will benefit you. unless they want you to liquidate some of that cash and put it right back to work in something that they're going to try to sell you on, okay? Whether it be a mutual fund. Remember, I've talked at length on this topic, really, is because those financial planners, man, they've got those mutual funds that they can recommend to you guys for a higher than average kickback if they can sell customers on it. And they will take advantage of I've been taken advantage of on this very thing. All right. So just be kind of careful on what they're trying to do for you. I don't know. I don't deal with financial planners anymore. I'm a liberated investor. I talked to one today, and she was very, very quick to identify that it was not going to be an enjoyable conversation. It was an enjoyable conversation. But I just very, very carefully laid it on the table for her and let her know that I'm a liberated, self-directed investor, and that the cold call that she made to me to try to win my business wasn't going to go anywhere. All right, because it just I see the prospects of self-directed investing, and it just doesn't equate. It doesn't match up for me. But that's a really good question. Thank you for offering that perspective. I've seen a lot more situations like that where financial planners are just looking to bring in as much capital or assets under management that they can, even if it doesn't have the financial best interest in mind of their client. And remember, they are not bound by that fiduciary responsibility. They're not required to carry that. Some are, very few, but most of them are salesmen. Sorry. That's just the reality of it, guys. And if you want a taste of reality, that's why financial planners don't typically come on the Independent Investor channel. They don't like guys like us. All right. They want to think that they're part of an all moral club that's offering a service to people that's worth money, where in my perspective, they're taking way, way too much compensation at the expense of the client. All right. And I'm sorry if I have to be the bearer of exposing that bad news to the community. So be it. I will take full responsibility for declaring that reality to you guys, because I've been there and I've done that. Okay, I've experienced it. All right, and a lot of the community has as well, and they're, quite frankly, they're sick and tired of it. All right. Opinions on fundraise REIT? Yeah, I think it's good. I think my friend Ryan Scribner does a piece on fundraise, I believe. I don't use it personally. So I don't have an opinion personally, but typically when these things get brought up in the group, I've got Captain Dunzo as well talking about fundraise. These typically carry over as topics in the Facebook group that we run. We've got close to 500 members in there. It's a very good group, and it's a very appropriate forum for some of these topics to end up over there in that Facebook group. So I'd like to see fundraise get dropped in the Facebook group. All right. I've got some Mystery Queen. You guys are talking to each other. It sounds like they just want commissions. Yeah. So that's an amazing topic you just brought up. I've got Obstinate One replying to Mystery Queen, and I want you guys to understand what they're talking about there. And I talk about this stock trade all the time. In a managed account, I was buying stock for $50 a stock trade. Stupid. I told you I'm a human being, and I'm not exempt from mistakes. The difference between me and a lot of people is I openly admit my mistakes, as well as share it with a group of 7,000 subscribers on social media, so everybody can say how big of an idiot I am. That's totally fine. The even bigger idiot part of it is, and I talk about my trade in Duke Energy, what that really kind of it was the straw that broke the camel's back, is when I entered into Duke Energy, it cost me $50, right? The stock ran up huge. I bought it in the 30s. It ran to 70. It more than doubled, all right? Made $1,700 on the stock trade, right? I was the one that took on all the risk, but at the time of liquidation, that stock trade cost me $300 to exit. $300. I ended up paying $350 total commission for one stock trade, one. Right now, I trade for free, nothing. All right. I can trade 30 stocks in a day. It'll cost me zero, nothing, zero with Merrill Edge. And that could be very well the case, is that Mystery Queen is actually sitting on some profit. and they want to go ahead and liquidate those for those higher than average liquidation stock commissions. That very well could be. Who knows? A lot of greed in the industry. A lot of greed, man. It's amazing the level of greed when we're talking about money. That's why for a lot of people, it's one of those very faux pas topics. It's a close second behind politics. I've got, but again, I bought Aurora. Just scanning through some of these questions here, guys. I really want to make sure that everybody gets addressed tonight. Baby cakes, these marijuana stocks are riding on the hype. Absolutely. I wouldn't touch them. I really wouldn't. If you guys did and you entered into a quick momentum trade, I think it would have taken sitting there staring at the computer and watching the profit go up and then hitting the sell button. It's possible. I've done it before too. I've taken those accelerated trades just like anybody. They are possible. It's not gambling. It's not. It's trading. It's trading 101. That's what you do. And it is possible to make a lot of money doing it. It's just I haven't touched that subsector yet, and I don't have any intention of doing so. With that said, I will offer to you guys what I feel like is a buy. Okay, we kind of touched on what I feel might need to be a little bit hands-off, or you might want to be careful with the technology sector right here. It is my favorite sector, and it will always be my favorite sector, but I would just be careful a little bit with technology. What I will look at is financials, number one, starting with JP Morgan and Citigroup. All right. I do own position in Citigroup. I liquidated my quick position in JP Morgan. I owned it for a few days. And I took profit. Okay. But I do hold Citigroup long term, as well as Blackstone Group. For you guys know and have entered into that position when I recommended it years ago. I would contend that I'm probably the only YouTube guy out there talking about a stock like Blackstone Group. Why? Because I read financial books, okay? Blackstone Group has been around for a long time. Those guys are some of the best in the business. And Blackstone Group, after a significant amount of years, is actually really, really moving north. It will be above 40 here pretty quick. It's slowly making me wealthy. I mean, that's a killer position for me. But Blackstone Group is good. I think there's a rotation into value right now. So if you are in a position where you're looking to add some value to your portfolio, Intel is a buy right here. I had one of my subscribers hit me up during the before the live feed and sent me an email and asked me if I would address his question. He's from Israel. So I would definitely want to give a shout out to Israel. There's a 9-hour time difference evidently via the email. So I told him or her, I think it was him, I would address this. And it basically was should I buy chip stocks right here? You got Micron, AMD going to the stars. NVIDIA slowed down a little bit. AMAT, some of my favorite stocks. And the question was, should I buy the sector or the subsector in chips? The answer is no. I would never, ever recommend doing something like that. If you wanted to add a cornerstone, the one that I recommend is Intel right here. I do own 100 shares of Intel, and I have no intention of trading it. Now, it meets that technology and value play that I think is probably going to become more attractive. I do throw Cisco in that list as well, okay? And then finally, healthcare, okay? Healthcare, for whatever reason, was dead in the water for such a long time. I think it does have a tailwind right now, because if there's any type of connection or perceived connection to the MJ community, it's going to be the healthcare sector that benefits from that. And you've noticed a little movement in Coke and Pepsi. I'm pretty sure that's not because of their legacy soda drinks, all right? And I will let you use your imagination on that, but I am a long-term holder of both Coke and Pepsi. If you wanted a little bit more growth exposure, value exposure, and maybe kind of take a little bit of a coattail in the back door on the MJ community without actually buying the cannabis stocks up front, okay? So you notice a movement in both KO and Pepsi as well. I do want to kind of offer the value stocks. I've got 5 stocks to offer for the group here, less than $50. I think I mentioned these a couple weeks ago, but I've already mentioned Intel, Cisco, but Pfizer. Pfizer's been making one of those moves north. I think AT&T is starting to make a little bit of noise right here, moving off of that $30 level, approaching the $35 level. And then finally Mondelez. So if you guys are looking for, some really nice, big companies to get involved with, those are 5 that pay a really nice, healthy dividend, and can kind of give you some of that. I know everybody enjoys when I throw out stock picks. Those are well thought through stock picks there for picks that are less than $50 right here. All right. I'm so tired of MJ stock talk lately. I'm afraid it's all hype. It is all hype. Absolutely. Don't think that that's opinion. It is all hype. But you need to understand as well, what do you think Tesla is? There's a company that doesn't make a dime, and you've got guys, even on YouTube, right, that are throwing out that stock for the sheer sake of entertainment, and I won't do it. If you want to buy an automaker, buy GM. I'm sorry, that's the prudent investment. I'd rather own GM than I would Tesla. Absolutely. I may take some scrutiny for that one, but that's fine. That's no problem. I'm a value investor, not an idiot. All right. Good evening, Ryan from Los Angeles. That is awesome. Got Teresa Ford on the line here. I met my wife in Hollywood, so got a special place in my heart for Los Angeles, man. No doubt about it. That is a very special place. I love Venice Beach, man. Love Redondo, Manhattan Beach. I love them all, man. So greetings to you. I'm from Oregon, so I'm a West Coast kid. I don't know what the heck I'm doing in Virginia right now, but that's where I am currently. So nice to have you. Very cool. So 17.97, that's what I saw. I've got Vian Shen, who's offering that same 17.97. So when we talk about the scalability of a passive portfolio, if you're, opting into that passive approach to investing, that you're not going to run the risk of underpacing the market. At the very least, you're guaranteeing, as long as you don't finagle with that, okay? Don't try to play with it. Don't try to think that because it's up 300 one day that you can sell it and then buy it the next day when it's down 200, because it's going to run up another 150 and you're going to be down. You're not going to keep pace with the market if you're screwing around with it. The only way to guarantee is to stay the course. And that 18% that I declared to you guys, like Vien is offering the 17.97. So we're right there together, neck and neck, in our portfolios, is because, and I don't want to imply that that's been passive all year, but mine indeed has. I haven't touched it one time. Okay. So zero maintenance whatsoever. So really cool. So I've got Mixel Plick on the line. Hey, Ryan, blue collar investor here from Michigan. So I lived in Livonia. So I've been all over the place. So welcome to you as well. I'm sure you can appreciate my GM pick. Gotta love GM. So Michigan is another place, soft spot in my heart, no doubt about it. I was actually looking at some property up in the UP just this week. So speak of the devil. I was a troll, all right? Not a Uper. I was a troll. So only Michiganders know about that joke. So it's really good to have you on board. I hope you're empowering your financial life. I hope you're getting some benefit out of the channel. We certainly aim to please, and I don't care where you're from in the world, quite frankly. Hopefully we can take and deploy some of these perspectives about sound, fundamental approaches in the stock market, because I contend that it is just not as scary as so many people will contend. That so many people, man, they just don't want to get involved, and they don't want to hear somebody out. They don't want to listen for just a couple seconds and hear somebody tell you stock investing is for everybody. All right. It's not for the elite. All right. This is how individuals empower themselves. All right. And it's the unfortunate thing about money. Okay. It really is. Money in and of itself is pathetic. It really is. But I would love nothing more than the salt of the earth of at least this country and the world, quite frankly, to utilize some of the techniques that I talk about to just help them help themselves, right? I'm utilizing it to help me, all right? And I teach along these principles, hoping that people will take and say, wow, Ryan's legit on this stuff, man. He does it, and he's telling me I can do it. I absolutely believe you can do it. I just had a comment this week. It was the one day, very rarely do I get a negative comment, very rarely, because quite frankly, I don't charge for the information through the Independent Investor channel. You guys know I did set up the monetary avenue for some of the folks that I'm helping, self-direct help. And a lot of those folks have felt obligated to compensate me for my time. I mean, the plan I worked on last weekend took me 6 hours, okay? It was a detailed financial review proposal, and it was good. It was good. It's not service that you're going to get from anybody free of charge, all right? And that individual felt obligated to give me some compensation, but man, you cannot find information like this that is that credible. Hopefully we're making a difference for people, man. It's really, really important to me. Blue collar investor from Michigan, man, that's awesome. So some of the best machinists that I ever dealt with was up there in the great state of Michigan, man. I met some killer people. I've been in some killer warehouses, museum quality warehouses, man, with the old cigarette boats, man, the old rum runners. They used to run across the river, man. So a shout out to my Michigan's a second home for me, man. Absolutely. I'm looking to add financial to my self-directed Roth. After some research, I'm thinking about Goldman Sachs. JP Morgan would also be a great choice, but Goldman Sachs could have more room to run. I think you could win with both of those options. I really do. I do like Berkshire Hathaway, the Class B shares as well. More of a holdings company. I do like just general big mega bank exposure. I think one worth mentioning here is Bank of America. It's kind of been forgotten in the low 30s here, probably forming a nice base here in the low 30s. I think Bank of America is a good one to look at. I think their properties are fantastic. I'm a customer of their business. I think some of the functions that they do offer, I've used Zelle. They offer Zelle. Their accounts are awesome. They own Merrill Edge. It's a really, really good offering as well. But if you're looking at the biggest of the biggest, I did liquidate my position in Wells Fargo. As you guys know, right, wrong, or indifferent, there's still some really good positives about Wells. I think you could do okay with any one of those offerings as well. Morgan Stanley, another good one. You could probably even justify buying some of the stock trading platforms like E-Trade, Charles Schwab. Some of those have been even better performance in the financials. I just think right here the financials are trading at 12, 13 times forward earnings, and I think you're getting a bargain right here. It's not going to last. So if you're going to get in on it, I would encourage you guys to do just that. Cool news that Mazar Robotics will become part of Medtronics, according to news story, for $1.6 billion. Also, do you still like Salesforce? Salesforce is my favorite growth company. It's my premium cloud play. So guys, I hesitate to give that information because I don't want people to go and just put their entire portfolio on Salesforce, okay? Please don't do that, all right? If you're looking to get some growth exposure to your portfolio, add CRM Salesforce. The ticker symbol is CRM. But please don't overexpose yourself to growth, which it's a cloud play, but it's still in the technology sector. So you got to be kind of careful here. Don't get crazy, all right? If you want to buy, 5 shares of Salesforce, great, but make it relative to the overall size of your portfolio. I would love to see you guys get to that first $10,000 mark, okay? If you're at that $5,000 mark and you're like, you know what, Ryan, I don't want to wait till 10,000. Great. Make a decision on your own to say, you know what, I want to add some growth to my portfolio. I'm going to pick up some Facebook and some Salesforce.com, and get to that $10,000 quicker, all right? You can do that. Just understand that you're taking on just a little bit more risk by doing so. I think Medtronic is a buy right here. We didn't even mention it when we were talking about the healthcare stocks, but I bought and sold Medtronic quickly this week and made a little profit with Medtronic as well. So just to kind of let you guys know, I'm all about it. Just don't overexpose yourself to growth right here. if we do get a hiccup in the market, those growth stocks are going to be the ones that fall the hardest. Okay. Avi, did you see how they went up from 50 to 220, then back to 130? That was crazy. I was watching it that day too. That's crazy. Baby Cakes offer JP Morgan Chase, certainly the premier bank. We got $500 billion of market cap in JP. Great investment. Some great positioning power, being the world's largest bank, JP Morgan. So good stuff. Salesforce is amazing. I'm up 7%. That's awesome. Relative to your total overall portfolio holdings, just make sure that it takes a little bit more risk tolerance to hold a stock like Salesforce. But it is the premier cloud play out there. I think it's well run. It's got great stewardship. They're winning business. I mean, it's probably my favorite growth stock. It will probably be the flagship growth stock, as it was in my M1 account, in my SEP IRA that I'm starting with Merrill Edge. Okay, it will be my premier holding. Okay, just so you guys know, I've been going for a little bit over an hour. I would like to kind of start to wrap it up, so I can get on with my my evening and my weekend. It's been a crazy week for me. I just kind of want to make sure that I've hit everything on my agenda. I've talked about my allocation. I've talked about which brokerage house you should go with for you guys, that are kind of going back and forth. Make a decision. And if you made the wrong decision, don't be afraid to shut the door and go with a new decision. It's okay. All right. Do not ever, ever hesitate or think that you're going to hurt somebody's feelings by telling them thank you, but no thank you. All right. Learn to say no. All right. It's your money and it's your business. All right. Ryan, I wish I could see you to get more knowledge and you could take a look at my portfolio. Yeah, I'd be willing to do this. I kind of throw it out there a little bit because I'm a little bit careful, because right now I get a lot of solicitations for direct assistance. And I have to be kind of careful that I don't spend my entire weekend. It does take a lot of time. And depending on your particular position, it may not be the most advantageous for you. What I mean by that is, if you've got less than $10,000, you can hit me up via email and I can kind of set you up. I don't hold any secrets back. But with $10,000 of capital, I think you should just pat yourself on the back and say, I've got a great start on this. Okay. If you do have 6 figures of income, the philosophy is a little bit different. My approach takes a little bit more work to try to look at whether or not we are overexposed, underexposed, what the right amount of exposure is. Should we take some off the table? Guys, you're just playing with more chips, that's all. And you have to be very careful, and I'm very careful with my recommendation with folks to make sure that they're not overexposing to the stock market or liquidating a position only to step back in and take on more risk, right? Or a risk level that doesn't acknowledge the current position of the stock market. I actually think that's more of a fair of an assessment. And that takes a significant more work on my part. But if you want to send me an email with your portfolio breakdown, don't spend too much time on it, because if I do talk to you personally, you're going to find that I kind of know the questions to ask you and kind of help you. There hasn't been somebody that I haven't talked to in self-direct help that I haven't changed their life. And I'm not an arrogant person. I'm an introvert. Okay. I don't say that lightly, but I think each and every one of those folks that I've helped would say the same thing. And I don't say that lightly, but it takes that cross dialogue for me to kind of get to know what you need. Okay, what questions do I ask? What answers do I get? And that kind of helps me formulate where you're doing good, or maybe you need to put some attention on. Okay, and I'm willing to do that. Just send me an email. You guys all know how to get a hold of me directly. It's totally fine. And just allow me a little bit of time to internalize. If I don't get back to you right away, it means that I'm thinking about what you've proposed to me. Okay, and I use those thought processes to kind of, when I do reach out to you, I'm kind of ready to go, in that I use the particulars that are declared to me. So don't hesitate, man. If you want to reach out to me and ask for that help, I take those sincere requests very, very seriously. And I typically return those calls via Google Voice to kind of protect my anonymity and my personal numbers and things like that. But people really enjoy it, and I enjoy it myself. Man, what happened to GE? It was going up until someone said things about the company. Yeah, I know. Our GE, man, that was a tough one. It's a drag on the portfolio this year, especially. But I'm holding out. I think it'll be fine. I think it'll come back. Point of Woods here, born in Prince William Hospital. Awesome. I got Uncle Skins in the house here. I'm almost to the end of the group here. It's been a really, really productive live feed. I don't really want to go much more than an hour and 20 minutes. So we're going to kind of cap this at 120. So I'm going to go ahead and kind of try to wrap it up for you guys. Remember what I said about me recommending my strategy. Okay. I don't have to do that. I could just get on YouTube and just say a bunch of things that a lot of people want to hear. Okay. I don't need to do that because I know what works in investing. All right. And if you're a new investor out there, I've got one person here that was recommended to my channel. And I really, really want to focus on condensing it down for you so it's easy for you to understand. Okay. Make no mistake. I advocate for investing on your own. Okay. Anytime that you ever introduce somebody that puts themselves in between you and the stock market, you're going to pay for that service. All right. And when I talk about empowering individual investors, I talk about the shortest distance between you and the stock market. Okay. Because you're always the one that is taking on the level of risk to enter into stocks. Okay. Because at the end of the day, in whatever form or fashion you invest in stocks, all right, you're investing in stock, whether it be ETF, mutual fund, index fund, etc. All right. The idea is that if you're going to take on the level of risk that you're willing to take on, then why are you willing to share your profits with people? And that is what I contend all the time, is that middlemen, okay, the financial planning institution, they're making billions. And the misconception is that they're behind some magic curtain working frivolously on your particular portfolio, and that couldn't be further from the truth. All right. Nobody's going to work as hard as you are for your own money, and that is a fact. Okay. And it's a liberating experience, man, when you start to understand the prospects of tax protecting your money and wealth protecting your money going forward. And the wealth preservation piece is the piece that a lot of people don't understand when they look to criticize my information and say, blah, 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 it's a bunch of talk. All right. That's the comment that I had this week, was blah, blah, blah. It's a bunch of talk with no substance. And I would offer this back. Okay. If you're not willing to open your mind a little bit to a new concept, it's going to seem like a bunch of blah, blah, blah. But make no mistake, I don't need to do this channel. Okay. I do this for the sheer purpose of helping people. Okay. That's it. All right. You can take this information and you can really deploy some of these strategies. And that's one thing I love about this niche, is that it is scalable. All right. In a landscape of financial offerings where if you come and you buy my course, I can guarantee you success, or you can make $5,000 a day, or invest in penny stock and become a millionaire overnight. That may be true for a very, very few people in the populace who are pushing that garbage and propaganda on people. The problem is it is absolutely 100% not scalable. Okay, you can't teach that to somebody. You can't. You can't say, here you go, here's my program. You'll have the same level of success that I had. All right. Independent investing absolutely is. And I expect that a lot of people who really listen to my themes in 20 years are going to be much more successful than me. Why? Because they've deployed the strategies earlier. That's it. I'm a realist. Okay. I've been doing it 7 years. If somebody deploys some of these strategies in their early 20s or 30s or even 40s and has 20 or 30 years of appreciation, those successes are going to be obvious. All right. And I'm going to be here along the way to help you guys understand the shortcomings and the successes in the stock market. And I'll be the first to congratulate you when you find this particular message, because it is not something that is easily come across, all right? When you talk to your friends, family, etc., I say this all the time. How many people have you ever talked to in your life who invests on their own? Very few of us do it. And very few people actually know that it is out there and it is a viable option. And with that, guys, I'm going to kind of sign off here. Thank you so much for the group. I enjoy this every single Friday. I enjoy it more and more. And the strength of it is you guys coming in here and offering your comments to the group, offering your stock picks, offering your experiences in the stock market. They are all different. And what we're looking to do is find those common themes to work for as many individual investors as we possibly can, guys. And I will leave you with that. Good luck in your investment future, guys. We will see you next Friday. Have a great weekend.